Hello there, my friends. Chris Marcus here with you for the Miles Franklin channel, and today a quick video about trade wars, Trump, and the Federal Reserve. I saw this one this morning. Professor Jeremey Siegel of Wharton, who I actually took his class when I was in the MBA program there a couple of years ago, is saying Trump can't blame Fed's Powell for a bad market if things go awry, with their takeaway that Trump can't blame Powell for the bad market. Now that Powell somewhat reversed course earlier this week, saying that he thinks we're close to a neutral rate, I would dispute that. Siegel goes on to talk about how it's more important than ever to reach a trade agreement with China. Certainly anything that allows free trade would be a good thing. Although, in regards to his comment about Trump and the Fed, Trump can blame Powell. Maybe it's Greenspan and Bernanke who, if you want to place blame anywhere, would be worthy of that. Because again, whatever Jerome Powell does at this point, it's kind of like the ship is already sinking. So you have some options, none of which are particularly good because the problem is already there and has been created. So it is fascinating wondering with this rhetoric from Trump whether he realizes the thing is about to collapse and is trying to shift the blame. So certainly it would be fascinating to see how that plays out. Although part of the reason I wanted to comment on this story, again, I mentioned that Seigel, again, a noted stock bull, his book that's well known, Stocks for the Long Run, again, was my teacher back when I was at Wharton. And it was actually fascinating. I remember it was in an after hours, or office hours rather, and there were a couple of us in there, and I remember he told us this was back in 2004, so when Greenspan was on his way out, Seigel actually mentioned that he was being considered as one of the Fed chairman candidates. Whether that's how serious that was, I really couldn't tell you, but I remember it was a little before I was still in my MBA indoctrination, so before I really gotten into Austrian economics, understood how so many of these things work. But it's fascinating in hindsight because, again, like many of the schools and MBA programs, certainly Jeremey Siegel would fall in the Keynesian camp, and in some ways would have fit right in and done a lot of similar things to what Bernanke has done. I guess not as much Yellen, just because the thing didn't crash on her watch, but fascinating, again, just seeing the Keynesian approach. Obviously, you see a lot of that on CNBC and through Wall Street. But again, I think misses the key point because whatever Jerome Powell does, he can either leave interest rates low and continue to blow out the dollar, or if he continues to raise interest rates, you'll continue to see the real estate market slow down. The banks have gotten whacked pretty good this year. So in a sense, it leaves it's kind of like past the point of no return, which is why I've always felt comfortable with gold and silver. I couldn't tell you exactly how long the wait will be, but at some point, regardless of which way the Fed goes, good days are ahead. So with that said, thanks for watching. Leave your comments below, and I will see you again soon.